You're listening to Biotech Hangout, a live and unedited weekly discussion of all the latest news in our industry with a group of biotech insiders. I'm Graig Suvannavejh, and my co-hosts today are Brian Skorney, Yaron Werber, Paul Matteis, Chris Garabedian, and a special guest, Adam Feuerstein. For more information about our hosts and our guest speakers, or to listen to the most recent episode, please go to biotechhangout.com. So with that said, it's certainly been a bit of a helter-skelter week with earnings, regulatory news, clinical data news, M&A updates, but things in biotech continue to be volatile. I thought they'd be on the up and up. Today seems to be a weekday in the tape, but let's hope things move in a positive direction as we finish out this year. I thought that we'd start with some high-level policy and regulatory news. Certainly headlines around George Tidmarsh resigning, and a lot of theatrics that seem to be in the background. I think, Adam, do you want to comment on this and start off there?
Yeah, it was quite the start to the week, right? With George Tidmarsh, head of CDER. I guess depending on which kind of side of the story, he was put on leave, he resigned, he decided to fight the resignation, but now he's gone. But yeah, this all kind of give you a little backstory. This all started happening actually a week ago, right? When George Tidmarsh was called into Macari's office, as we reported on last Friday. George thought that he was actually going to get some good news during this meeting with Marty Makary that Vinay Prasad was going to be fired from the FDA. Instead, he learned that no, in fact, it was him who was getting the boot. And this all centered around, as we reported, centered around a complaint that had been filed by Kevin Tang, a healthcare investor. I think probably a lot of people on this call at least know or have heard of, who had filed a complaint with the FDA about the fact that that George was using his position as head of CDER to essentially exact revenge on Kevin because of some the falling out that the two of them had years ago.
I think that it's created a lot of uncertainty in the markets, clearly. I mean, I think we had come to a place where, uncertainty with FDA. It seems as if, investors had become a bit more comfortable with the uncertainties, but certainly today's or Monday's news clearly kind of sets things in a completely different direction. I think we've had some other FDA-related news that has impacts on individual companies, and particularly with respect to Sarepta. We've got a couple of analysts that cover Sarepta, and maybe I'll start off with Brian, if you want to comment there.
Yeah, I'd love to kind of bring that up. I think actually Sarepta is something we want to talk about a little further down, because just kind of going back to Adam's commentary on the Tidmarsh resignation. I think one of the things that I've heard a lot from investors, and what came really on top of this, is not just his resignation, but the Uniqure news, and I'll try to pass it over to Paul to walk through a little bit of that. But one of the big things that I think came about both through the Tidmarsh news over the weekend and the Uniqure decision is this elevation of concern among investors that it is now, more Vinay Prasad's FDA than Tidmarsh's FDA, certainly. Or sort of the messaging from Makary that we've had on sort of like the flexibility, like, oh, we're going to approve things for orphan diseases based on natural history data, or based on preclinical evidence, stuff like that, sort of pushing sort of the classical GOP talking points of enormous flexibility around these things, and so I think Tidmarsh kind of losing out in what seems to be a little bit of a civil war with Vinay, then leading into the Uniqure decision, and we'll have to discuss thoughts on that. But I think certainly there's a concern that is that Uniqure flip tied somewhat to maybe Vinay being more of the emerging victor in the Civil War period. It's certainly something where I think those of us who know Vinay, know Adam and I know him from long ago. It's sort of the type of thing that he would really look at and scoff at. So I don't know. Maybe we should jump to Paul first to just kind of talk through the Uniqure decision.
Yeah.
I think essence kind of ties in down the stream.
Yeah. Thanks, Brian. Can everyone hear me okay?
Yeah, we can.
Okay, great. Thanks, guys. Yeah, the Uniqure thing is crazy because I mean, I think at face, even if you're a believer that the efficacy of their Huntington's gene therapy looks promising at 3 years or really, really promising, I mean, it's still, I think, reasonable, no matter how bullish you are, that you can debate those data, right? It's not a big sample. We know the study didn't separate from placebo at 1 year. There's a valid explanation for that, but that's just the reality. So I think, like, we all knew, I think people who own Uniqure, right, that there's valid nitpicks with those data, even if they look really promising, and the 3 year data was kind of backed, validating the 2 year breakthrough therapy status. But I think the bigger issue here is that it just makes the FDA seem super unpredictable in this space. And none of us were in the meeting, right? Like, as an analyst covering Uniqure really closely, I haven't seen meeting minutes. So, we've seen companies in the past, right, like, misinterpret the FDA or think the FDA's vibe is super positive, but it's a little bit more neutral, right? We understand that there's a subjectivity to this, but I guess just being close to this Uniqure situation, like, I thought their regulatory alignment for something flexible like this was maybe a lot more thorough and rigorous than average, right? Like, they had a meeting a year ago using this kind of natural history control for their analysis, right? And that's one thing, right? You could just say the FDA is open to it, but then they had a separate meeting in the spring where they actually essentially, like, unified on an SAP, right, a statistical analysis plan for this 3 year data, and incorporated some really specific feedback from the FDA, right? The FDA actually, was kind of aligned with them using a different natural history database than the 2 year data, a slightly different analytical methodology with how you compare the patients in their study to a natural history study. And alongside this meeting, Uniqure got breakthrough, right? Which, seems like the FDA is kind of saying, hey, this 2 year data looks promising. We're setting you up with an SAP that if you actually corroborate this again, like, you're set up well, right? So for them to have this 3 year data that was considerably better than expected, right? They essentially had disease slowing versus natural history at 80% at 2 years, 75% at 3 years for their high dose. And then to have this meeting where essentially they don't have the minutes of the outcome, but they're saying that the FDA kind of conveyed to them that this natural history analysis, actually, because it wasn't the goal of the study from the outset, is actually exploratory and not, something that could support a BLA submission. I mean, it's really surprising. And I think there's some investors who, again, have come out and said, well, hey, like, this data's had issues. We've known that. Like, to me, like, that's not the point. Like, the point is, like, they had a meeting around an SAP 4 months ago. Like, are we supposed to believe that that was like a sham meeting, right? Like, for lack of a better word. So, like, I just think, like, for the investor community, if we just kind of take a step back, like, obviously we'll see how the Uniqure situation plays out. Like, there was a Wall Street Journal op-ed this morning that seems to be applying kind of the same sort of pressure on the FDA that we had seen over the summer with Replimune and Stealth Biosciences. But then separately, there's this kind of broader flow through to the gene therapy space because, there's a number of other companies in this space that are running single arm phase 3 studies. I think what a few of those companies have come out and said, and rightfully so, is that we've sort of pre-specified this from the beginning. But, like, as Skorney's talking about, right, like, all these things are changing in real time. Like, if Prasad is just kind of won the recent power struggle, and, like, I think there's investors kind of asking, okay, well, what are the implications for everybody else? And I think the other sort of complicating thing here too is that we actually in late September just got FDA draft guidance for gene therapy and cell therapy that, like, sort of aligns what Uniqure and many of these other companies are doing. And again, like, late September feels like right now to me emotionally like a year ago, but it was 5 weeks ago. And so, I mean, I think all of this stuff is still really dynamic. It feels like the Tidmarsh situation to me, even though it's potentially unrelated to what's happening at CBER, opens the FDA up to maybe more political pressure just because of the broader optics around instability. But, guessing what the next move is hard. And, when Adam, I'm not saying this just because you're on the call, some investors have been asking me, what's the next catalyst for Uniqure? And I'm like, well, let's see the Stat News expose and what's happening at the FDA.
Well, we're working. We're trying to do that, Paul. But I want a question for you as a follow-up, because I think you made a good point about that there has been some debate about the data and the way it's been analyzed with the natural history. Do you feel like these kind of issues, though, are review issues, meaning that maybe in a different time and place within the FDA, that these are the kind of things that, they would have filed, the filing would have been accepted. And these are the kind of things you would see brought up at an AdCom. These are the kind of things that you would want to deliberate over during the review process, and not just tell a company, no, you can't file.
I mean, you would think so. And Adam, I follow closely what you guys write. I follow what you've been saying about this on Twitter. Like, you were saying, hey, none of us were in the meeting. We don't know if there's something else about this data that we haven't seen, or there's a nuance with it that's an issue. Like, all of that is true. But again, at least as I understand it, they're going to have to do, if this ever gets filed, sensitivity analyses around different ways to analyze this, compare the analytical methodology and how you compare versus natural history. I understand it, this Enroll HD study that they use versus Track HD, and there's one other natural history cohort that they could be they're all very, very similar. So, to your point, Adam, if this actually kind of got rejected under greater scrutiny from the FDA, it feels like that would have happened during a review. I guess what I'm trying to say is I don't know what could have happened at this meeting with the data we've seen and my understanding of kind of what the little basic high level sensitivity analyses would be. That
Did you all lose Paul?
Yeah,
we
Paul, you're
lost Paul.
coming in and out.
Okay. I think we just lost Paul. Maybe what we can do is, I know we were talking about kind of inconsistencies with FDA, and gene therapy has been a space that has had its ups, it's had its downs. I kind of feel that well, there he is.
right?
Hey, Paul, you're back.
Oh, sorry.
Paul, we
Did I
lost you
cut
for
out?
about
You cut out
45 seconds.
Oh, that's awful. Okay. Okay. I'm sorry, guys.
That's all
I was
right.
getting another phone call and I just ignored it, and I thought that was good enough. This is the platform we're using. I mean, I guess what I was saying, and I'll just be very, very brief, and then everyone can kind of turn it up, is what Uniqure said about this meeting, which again, what I was trying to say is just based on the high level disclosures I've seen, and then also the high level sensitivity analyses that you would do with this data versus other natural history databases. It's hard for me to see what would have come out just at a high level kind of meeting where you're looking at the data, again, not on a super, super detailed patient level. I don't know what would have come out at this meeting that would have shut the door, right? It feels like this should be reviewed, to your point, Adam. And then I think the question is just, Uniqure has said Vinay Prasad was not in this meeting. So is he directing the clinical team, the stats team separately? Is this folks in the clinical team who had been ambivalent, but maybe couldn't convey that back when others were at CBER who've since left, folks that were under Peter Marks, and so just a lot of uncertainty. But I'm sorry for cutting out, and I'll just stop talking.
I would hope, I would hope to see, radical transparency here, and something I wrote this week is, the FDA has talked about radical transparency. I mean, we now get CRL letters in almost real time, but it can work both ways, right? And so, it seems like it'd be a good, if Uniqure feels like it's in the right here, and that this is just sort of this unilateral power grab by Vinay to, just sort of to put his stamp on this. It would be great to see all those meeting minutes from Uniqure, right? All the past meetings, all the agreements, everything that the FDA told them. That I feel like, put that out in the open so that we can all see it.
Can I just jump in and just want to add just on sort of that topic? I mean, I think as much as we can say, is it Vinay specifically as a result of a power struggle inserting himself here? I think it's going to be less explicit than that. I think that what you see in the FDA is, review teams feel emboldened one way or another based on sort of the leadership mentality, right? And Peter Marks really pushed for this flexibility, and I think the review teams felt that push from leadership for flexibility, right? Wilson Bryan was before him; he was less flexible, but he he was sort of shown the door by Peter Marks in an effort to be more flexible, right? So I wouldn't be surprised if this isn't Vinay very specifically stepping in and saying, oh, hey, this is why this is not gonna fly and we're not gonna review this. I think it's more, right, he is the de facto leader of CBER. He has very, very clear views that we know that are well publicized on his YouTube, on his podcast. So we basically know his take on natural history studies for slowly progressive diseases. And you could pretty much pull slides up on that. And I think we'll talk about some other diseases that he's been vocally critical of in a couple of minutes here. But I just wonder if it's less that these are a bunch of applications that are really on the bubble, right? Like, I don't think anyone's looking at the Uniqure data and saying, oh my God, this is a Lazarus effect. You're kind of looking at the data and you're hopeful that when you do a comparison to natural history that you're showing a slowing in the progression of the disease. But I think the level of certainty is certainly not there. And that's a lot of these applications. So I think when you think of these bubble applications, I just wonder, is it just the tone from leadership in the FDA that's shifting things one way or the other?
Well, we for whatever it's worth, we spoke with I guess it's okay for me to say it. This was public with Ultragenics this week. We did a session with them, and they did mention that the bar, an agreement they had with the previous CBER under Peter Marks for the filing in MPS 3A, UX 111, it was gene therapy. That discussion and that plan then shifted under this new FDA, and what they again believe that they will be able to do during the review process, in terms of manufacturing documentation and finish some experimentations. Ultimately, the carpet was pulled below them, and they got a CRL out of nowhere, and the FDA wanted all that kind of settled ahead of time. So that was a change unexpectedly.
Is anyone else like a little confused though? Like, it felt like the obvious backlash that came out when Peter Marks left, and basically we had Vinay Prasad and Macquarie, was that they did their listening tour, they did their podcast online, and it felt like their commentary around rare disease was very Peter Marksian, right? And then they put out these guidelines at the end of September on cell and gene therapy, and again 5 weeks ago, that read pretty bullish for the space. Like, why are we seeing, at least my read on their kind of public commentary on this stuff is super flexible. I think we're all reading these recent actions as much more inflexible. Like, are we supposed to believe that the public commentary is a little bit more like politics? Like, how do we think this kind of all like?
I mean,
sort of resolve?
I think you hit you're exactly right. It's the dissonance, right? It's the dissonance between the commentary and the things that Marty Makary is saying, that even in some respect that Vinay is saying when they get together and they do their little podcast or in speeches, versus the actions that we're seeing, right? They don't line up.
Yeah, but let me just weigh in here, because I don't think this is new. I think going back, honestly, a couple decades, and definitely, I mean, we're going to talk about Sarepta, but the hierarchy was always signaling flexibility. We don't look at phase 1 versus phase 2. I mean, you can get it approved on, I remember Janet Woodcock saying you can get approved on, a small patient study if you have an effect size. And so there was always this disconnect between what the hierarchy was doing, rah, we're flexible, like we're willing to work with you, and the divisions who wanted to go old school and apply that rigor. And so I kind of look at, because we all heard this from the hierarchy, but translating that into practice is what has taken time. Some would say it never fully was realized, but we did see this slow creep with accelerated approval, rare disease. That pendulum can always swing back. But I'm not that surprised that hierarchy, because their job is almost promotion, right? Market the FDA as willing to be flexible for the sake of patients, not getting in the way of industry. So I'm not too surprised that there's this dissonance, because I've seen it too many times in the past.
I don't even know that there's that. I mean, I think that there is definitely some element of dissonance, but I think when you listen to like the words, I think there's certainly at least a rationalization that it's not just a political leaning in terms of the dynamics. And I think, right, you can just go onto PubMed and if you just type in Prasad parachute, you'll pull up a bunch of publications that he has published, where he has this view that, if you have a parachute, a medical parachute, where your effect size is 100%, you don't need controlled trials. You don't need a lot of study. You don't need many patients, because it is so profound that absolutely you do a natural history study. Absolutely you do a 10-patient approval for a parachute. But his whole career arc is showing how most medical interventions are not actually parachutes. And that kind of, so I'll maybe segue into Sarepta and the history here, because to me, I think to some extent, and this was earlier in my career, but certainly not early in my career, a lot of us can kind of mark the Sarepta decision on Exondys 51, going back 10 years ago, as sort of the first shift. And it's the first time I remember the intervention of a CDER director to change what is the normal designated signatory authority's decision, and Ellis Hunger's decision, to recommend a CRL for eteplirsen and overturn it. It led to a bunch of controversy. Bob Califf reviewed it, eventually, supported Janet's decision to overturn it, although not necessarily really giving a lot of the scientific support to it. So, Chris and I go way back from, basically the early days of Sarepta and eteplirsen going through the regulatory approval process. Now, what happened earlier this week is Sarepta announced earnings, and in concert with the earnings, they announced the failure of a large phase 3 study. To my knowledge, the largest, longest DMD study that has ever been done, not for eteplirsen, but the two other exon skipping agents that they got subsequently approved by the FDA, and golodirsen and vitoplirsen. And that study failed. And we could talk about the data, and Sarepta certainly tried to make the best argument why, even though the primary analysis failed, the trends were favorable. They made this argument around, if you excluded COVID patients, it didn't work. And I think I'd love to hear Adam and Chris's take on this, because I think we've both been, all three of us have really been in the weeds on this historically, and I think at different points really did believe that this drug, or this PMO exon skipping method hypothesis would lead to a benefit. It's kind of like a wake up moment for me. I don't think it worked. And Chris will probably remember, I really pushed Sarepta to do a 2-year study, because I've always said, look, there's a slowly progressive disease. You might never pick up a signal in a 50 patient 1-year study, but in a study of this size, to not show an effect size, really calls into question what are we doing here?
I mean, I went full snark on Twitter, or X Twitter, during the call, the Sarepta call. Brian, you probably saw it. Where I said, Doug Ingram is very, very good at making excuses, and speaking. Look, we all know. We went from the 6-minute walk test was the best endpoint. And then, that endpoint failed. So then we went to the North Star. The North Star was the best endpoint, and that failed. And then we went to the stair endpoint that they just used, and that failed. So I guess I just agree. These drugs just don't work. And all we're hearing is just excuses for why we should do something else. I just don't understand it.
I think there's is a debate amongst investors whether this new regime at FDA is actually good for the industry or not good for the industry. Obviously, the uncertainty, the kind of flip-flopping, or the just the unpredictability is not helpful. But I'm wondering what you all think about this kind of new regime, in terms of you have to have good clinical data that will support an approval. And for even in these rare diseases where, yes, we want something out desperately for patients, we've seen that, we've seen a bending of the rules, so to speak, to get certain drugs across the finish line. And I'm curious, maybe Paul, your thoughts, and maybe we'll hand it off to Yaron on your thoughts on kind of, is this good for the biotech industry, for companies, and then for investors as we look to help them, make good stock?
Yeah, Craig, I have some thoughts on this too, but I'll let Paul and Yaron weigh in as well.
Okay, I'll be super quick because I know everyone wants to chime in. I mean, I think it can't be good right now unless it's predictable, right? Like the Uniqure situation, like I said, whatever you think of that data, the outcome of them just approaching a pre-BLA meeting after 4 months earlier agreeing on an SAP, I mean, whatever you think of the data, that was not predictable. And by the way, the market's telling you that was not predictable. And I think when we look ahead at other companies in the space that have certain regulatory agreements that have embedded flexibility in them, even with this current FDA, there's still investors who would be interested in funding these programs and putting capital to work to help bring these treatments to patients. I mean, obviously to make money on stocks, but at the end game is getting drugs approved for patients. These investors are having trouble because I think people don't know if what is being said, I know, Chris, you said this happened before, but people don't know if what's being said publicly on a podcast is really like the truth. And so I think that's difficult. Like, Brian, you and I cover Dyne. Like, Dyne has data coming up in DMD by the end of this year. It's a placebo-controlled study. In phase 2, they make 15 times as much dystrophin, right? I'm sure, Brian, you get the question from people on what is the bar on the functional data for Dyne to get approved. I mean, you don't know and I don't know, right? So like, I do think like, even if we can come to some sort of conclusion that maybe like being more rigorous on the data and the efficacy data could be better, right? Which is like a theoretical argument, but I'm open to it. What I hate right now is I cover a number of companies where investors are asking me like, hey, the company has met with the FDA and the FDA said X or Y. Like, they don't even think the company's wrong, but they're worried like, is that alignment real? And I just think that in itself is not good for the industry.
Yeah, let me comment on just all the whole FDA thing. First of all, I want to. I have mud on my face on. I thought Tidmarsh was one of the better picks because of his biotech experience. And man, what a rookie mistake he made, because it really hurt, I think, the credibility of the agency by bringing a personal vendetta out in the forefront, where people have criticized, is this how FDA responds? Do they like certain companies and not like other companies? Do they like certain CEOs? And the idea of having a standard where that should not come into play, it kind of is evidence, wow, maybe this does come into play more than people realize. So I think there was some serious damage done. The hierarchy infighting and just the uncertainty and the chaos that seems to ensue. Again, I don't think this is new. And going back to Brian, I think you mentioned it. And what's interesting, Caliph supported a committee that was led by Lou Borio that was called the Scientific Dispute Resolution Board. That Scientific Dispute Resolution Board voted in favor of overriding Ellis Unger's position against approval. Caliph supported the Scientific Dispute Resolution Board, okay, to favor Janet's decision. So this idea that hierarchy gets involved, they have a dispute resolution process that was followed. All the debate around. I think they followed the right protocol to ultimately approve eteplirsen. Now, I think you said it with the parachute comment, Brian. Avexis stands, I believe, as the gold standard, right? You've got 12, type 1 SMA patients that were still living after 2 years. Nobody was disputing. That's a clear signal, should get approval, should get full approval. We should always have room for that. And I was always on the record of saying DMD is not that, right? You're not going to see that type of effect, even with a gene therapy. And so just looking at Essence, and by the way, Brian, I felt a year was enough. And I was against the 2 year because it just meant we would take longer to get data. And I honestly, I'm appalled that it's taken this long because they renegotiated the trial design. They didn't start it until much later. I was getting pressure as CEO to start that study sooner rather than later, and I was actually the one who got the first master protocol approved, which became Essence. But then they renegotiated that, redesigned it, and it was delayed. So we shouldn't have to take this long to get a readout when that study was approved and designed originally back in 2014. But I think that ultimately it was a disappointment. I thought that the drug would show an effect. I think it hasn't. I'm more concerned with what they haven't shown. Adam, you said it. It was 6 minute walk. North Star now forced their climb. What else did they capture, and what did that show? If the forced stair climb is the best data that they were able to muster over 2 years, and I don't know, maybe they've shared more, or maybe they'll share it at a future conference. But I would want to see the full data set to make any decision. And the only difference here between the way I see it for gene therapy versus oligo RNA chronic administered drugs is that one, you've got safety that is more clear, right, than the gene therapy safety data sets that are coming out. So that's number one. The risk benefit is definitely different. And then number two, there was always this talk of if you approve drugs that are not great, that might, quell other drugs from getting to market. We have not seen that. So over the 10 years, we've only seen more and more and more technologies being moved into the clinic for development because the FDA used a pretty low standard to approve those drugs. But on gene therapy, I think the issue still stands because you may have to factor out patients who will not be able to get a better gene therapy down the road without taking significant risk with immunogenicity, et cetera. So I think these are complicated. And the other thing is this raises the question of, is accelerated approval even good for the industry? Does it work when you've got over 10 years, right? Thousands of patients that have been on these drugs. I am sure there are parents, and Adam, you guys have showcased DMD out of the gene therapy of, hey, they're benefiting, they're seeing benefits. So, what is the FDA's position to go and say, we're going to pull those drugs from the market? And maybe what's driving the bullishness from Doug and Sarepta saying, hey, I don't think there's any way these drugs are going to get pulled. And I'm not saying that's necessarily good for the industry, but when you look at the risk benefit, you can understand where they may allow something. And then it comes back to the reimbursement. Are the insurers having more of a position to say we're not going to reimburse because the evidence isn't there? And then these poor families are going to have to pay out of pocket. So it's very complex. We do 3 shows on this, as we've joked about, but I just wanted to highlight kind of those themes.
And then, Brian, you had Biohaven, which got a CRL. You want to talk about that?
Yeah, so I think this is also super interesting in the context of everything that we are talking about, as well as Uniqure, right? Because in many ways there's a lot of similarities here. So Biohaven received a CRL this week for their drug Troriluzole, which was under review not by CBER but by CDER. So Tidmarsh, last weekend it was Tidmarsh's center. As of today, we have no center director, which is also interesting because people are reporting that Pazder has turned it down, as has the OND director. So we'll see who wants to actually take that spot. But Biohaven CRL was from CDER, and the story here was they ran a phase 3 study that was a short follow-up, and it failed on the primary analysis. It had a very, very high p-value. I think it was like above 0.9 on the primary analysis. But they found a subgroup that they thought there was some effect size in. Eventually they were trying to get approval for that, but said they wound up having a discussion with the FDA to discuss using the open label extension data that they've had to compare to a matched natural history cohort. They've gone through a lot of meetings with the FDA, and Biohaven's press release kind of goes through the history of meeting with the FDA to discuss a statistical analysis plan and the way to look at the data sets for this natural history to then file for a comparison between this 3-year open label data and natural history. And the statistical analysis that they did, hit on primary endpoint, hit on all secondary endpoints, and it was really kind of marketed as, hey, for a natural history statistically significant data set, this may be the gold standard. And they filed for approval. And there was a lot of skepticism. I think a lot of us kind of look at these natural history data sets and a lot of the comments that FDA reviewers and the biostats groups within various centers have talked about just the problems with natural history and the biases that can be introduced. And it goes back to what I was talking about with like Vinay's publications on what parachutes are in medical intervention. And they got a CRL. So it wasn't a total surprise because of this natural history basis. I think it was a little bit of a surprise in the context that, the Biohaven management team kind of positioned this as a discussion over a long time with the FDA, going through rigorous kind of statistical analyses plans for looking at this comparison. And the CRL was issued. And, they made an effort within their press release to kind of criticize the FDA and the history and say, hey, this was a big surprise to us. And, we really feel like that are not given the proper due course in the review. And the CRL is up, and looking at the CRL, I think it came up yesterday. It's unsurprising. They bring up the FDA just brings up, hey, when you make these selections for studies, there's a lot of biases on a natural history cohort that you're not accounting for, and they kind of they don't have a full review out. It's just a CRL, but they do have a couple of paragraphs and sort of the statistical analysis and tipping point analyses to say, when you do certain tipping point analyses around the assumptions, they wind up failing statistically, and that seems the derivation for that CRL. So here's kind of an example where we were a little blind on what the Uniqure discussion is. We're less blind on what the Biohaven back and forth was, because now we have the CRL and we can see actually, this was a review where the statistics of it were really hammered in the CRL to say, they just can't look at this 3-year open label natural history comparison data set and have real confidence that the effect size is real, and that's the driver of the CRL.
Well, the stock got hammered, and speaking of stocks that have been reeling, Yaron, you cover Stoke Therapeutics, which sold off on the heels of the Uniqure news. Would love for you to spend a minute or two just on that situation as they try to get a drug approved for Dravet.
Yeah, so it's a great point, and this is a chain, and they're all interlinked, all these events, and maybe just to zoom out and piggyback, Chris, on what you said, is this positive or negative? The one concern is recall what it was only about 3 months ago that FDA came out with a new draft guidance on behalf of CDER and CBER about using natural history, using preclinical modeling, predictive analysis set on areas where you can have targeted therapy / genetic medicine based on biomarkers, and then using real world data, and all of that can support an approval for orphan indications without controlled studies. Since then, it's been a little bit of a train wreck. So this kind of seesaw situation obviously is sort of not a positive for the industry, and this leads to Stoke. So Stoke has a drug. It just call it Zora. It's a zorevunersen. It's an ASO for NaV1.1, which causes Dravet disorder. The phase 1/2 data. The NaV1.1 channel is both excitatory and inhibitory on neurons, and that's a channel that is completely affected unquestionably in Dravet disorder, and it's knocked down. What they're doing is essentially knocking up expression. And in the phase 1/2 data, the data overall looked really, really good. There are 4 years of data now showing a profound seizure reduction in patients who had 6 previous drugs, and there's neurocognitive benefits as well. It really looks like a disease-modifying therapy. But there are some questions, and the questions were, because they are back upregulating NaV1.1 in preclinical models, there was actually some untoward effect in dogs, admittedly in very high doses. Because of that, FDA capped their dosing. They subsequently in the US had a slightly different trial design than in the UK. They actually had a partial clinical hold in the US also because of an NHP finding, which was never seen in patients. And the data overall looked really, really good, but it's not perfect because it's against natural history. The seizure reduction of, you're talking about 60-80% is unquestionable. So they're in the meantime are now enrolling really quickly. Biogen is their partner, a phase 3. It's going to be global, looking at a 24-week seizure reduction as a primary, and then secondary endpoints, which are important for neurocognition to really get a disease-modifying label. In the meantime, because they have breakthrough under a new CEO who maybe is a little bit more kind of savvy or willing to maybe engage more with the agency under a breakthrough designation, maybe than previous management, to see if they could file based on phase 1/2. That's the biggest bottom line. And that's why the stock essentially doubled as of 2 weeks ago, and then the Uniqure decision happened. So now we know, because Stoke reported they'll meet with FDA in December. There's some challenges, though. We've talked to other companies who are developing ASOs for DEEs, and they're saying filing based on phase 1 or phase 2 data is very complicated. And we shall see. It's a little, unquestionably, the drug works, but there's some questions about if you really want to get a broad label with neurocognition, you're going to be looking against natural history. The dosing in the US study versus the UK study was different, and that's actually even different than what they're doing in the phase 3. So which dose do you even suggest to put on the label? There's some structural issues as to what's going to happen with this.
Hey, Yaron, question just as a follow-up. Do you think, the stock really started moving up, over the summer, right, when Ian Smith, their new CEO, started kind of talking about this possibility of the early filing? Because, one of the bear theses one of the criticisms was the phase 3 is going to take a long time, right? So, like, why be in the stock? It's going to take a long time. So this was, potentially faster way to get to approval. And the company started talking about that, and that really resonated with investors. Do you think that was like? I think people just read too much into that. I mean, obviously, it was always going to be sort of a high risk thing, right? I mean, it's like you mentioned, it was going to be. It's always difficult to file on early data like that. Do you think that people just got too ahead of themselves on that?
Yeah, I mean, as you know, Adam, and then it gets into a situation where they have a certain amount of cash, and this is going to be a sizable product, right? And all our consultant checks are unbelievably encouraged with this data set. That they think this is the best looking product in development probably ever for Dravet. But we're not going to have data, to your point, until second half 27. So it's a question of what's the chance that they can potentially be on the market a year or two earlier, essentially. Let's say, second half next year as opposed to second half, 28. Um, in a drug that's going to be, at 500,000 per year, it's going to be a sizable product. And that's got its own inherent value. And so even when the stock was at 38, a week or two ago, people were thinking, okay, it's a 1.5 billion market cap, 400 in cash. And if it's going to sell 2 billion peak, you can kind of figure out where you think the stock is going to go. And it's not a bad risk reward. And the stock was setting up for an update on the earnings call. People thought, and we all thought, the update's going to be whether they met with FDA already or not. And I think there was some hope that they've already met with FDA and had the green light. Look, there's also a question of what FDA says, and we all know, and then what the company communicates, right? And there's probably three scenarios. One, thumbs up, go ahead and file, and we're very encouraged by the data and very supportive. AK, you're getting approved. Two is you can file if you really want to. We'll see if we even accept it, and you didn't meet any of your endpoints and things like that. That's probably not going to go well. And then there's always that gray zone. It's going to be a review question or review decision. And what exactly that means for Wall Street, that's completely opaque because it could be a review decision and they're just kind of, saying it to keep their options open, but they're going to approve it and they're actually very supportive versus, yeah, go ahead and file. It's a review decision and just say FYI, you're not getting approved. We don't know which one it is, and that's usually the challenge. And the question is, does the company?
Yeah, these are all Go ahead.
I was just going to say, I think like one of the ironies about the Stoke situation, and I don't know if there's any, I'm not saying there's tea leaves to read about it, but just to bring things full circle, is the outgoing CEO who left before sort of the concept of filing on this data was actually the CEO who was at Sarepta when eteplirsen got approved.
Yep.
Ed, a lot of us know.
Small world.
Yep.
In other industry news, we've got a bidding war going on for Metsera, which is a saga in its own right. I can't believe the back and forth. You know, Chris, I think you might want to provide a perspective on what's happening here.
Yeah, sure. And just a final comment on this whole FDA thing. I honestly, I think it was maybe necessary when the old guard left the FDA, but I long for, I mean, many of us long for the days when you had Janet Woodcock, the Bob Temples, the steady, decades long, you've got a whole new regime who has not worked together. And I think there was even battles and infighting with the old guard. But I think, and Adam, you had a good kind of sober minded view. Like, let's not blame everything on the FDA. Sometimes you got to look at the data. And I'll just add that industry really looks at these decisions less so than guidance, right? What is the FDA calls on all of these? Then that's guiding all of us. So moving to Metsera, I mean, this is overall as an investor now, this is a good thing. We've been 5 years in, what was ultimately a buy-siders market for investment, meaning that like the investors, would dictate the terms for a startup. And this is a clear signal that if you have a good drug and you are in demand and there's scarcity value for a battle, that this is what you ultimately want to see as a biotech investor is that pharma is tripping over themselves to get good assets, right? Or to not lose out. And so this, when we see these types of bidding wars, I think it's good. I mean, at the end of the day, the market caps and the currency value that Pfizer and Novo have, I mean, these become rounding errors, and the beneficiary is the Metsera shareholders and team. And so, and it's just nice to see even this kind of mudslinging, right? Of Novo calling Pfizer, right? Like, BS on their call that it's antitrust. So anyway, it's fun to watch, but I think overall this is good. When pharma's stepping in, they realize that biotech has important assets, and it's nice to see when there's a bidding war that ensues.
You've got huge for pharma in several years to get a view from whether we I see more bidding wars like then huge billions of dollars of revenues that are potentially going away and big balance sheets by pharma.
I missed a little bit of that, Craig. I don't know who was, but basically, I think the patent cliffs are real. I think this is why we've seen some robust M&A. I think it will continue for assets that have clear clinical proof of concept that everybody believes is headed to approval. Obviously, Avidity is a good example of that recently, and so this is all a good thing. And along with the XBI, along with the follow-ons, along with IPO window, I know billion to one is not necessarily drug biotech, but I think there's really good signs that momentum is hopefully going to be
Okay.
sustained.
We do have some other company specific news, but before we go there, Adam, you wrote a really fascinating article on Arena Bioworks. Could you share with us kind of with that shutdown, kind of what you reported on?
Yeah, that was my colleagues Jason Mast and Allison DeAngelis. Allison actually had gotten a tip a week or so ago, maybe even longer, just that Arena Bioworks was having some difficulties. And for those who aren't familiar, it's kind of this was a very buzzy sort of I don't know, maybe Chris, you can kind of maybe describe it a little bit better than I can, but kind of a hybrid between it's like a research institute that they had raised like $500 million or had $500 million in committed capital to this new venture, which was going to kind of be a bridge between academia and industry, and you were going to get all of these very A-list type scientists to come in and tackle big scientific challenges, and then spin-off companies, and then the company Arena, very suddenly and surprisingly shut down this week. There was an all-hands meeting where they shut down essentially over, basically over financing and the inability to kind of, because of the difficult financing market these days, particularly for private companies, they didn't see a way forward and are shutting down.
Yeah. I'll just add to that briefly. So first, shout out to Allison DeAngelis because she was first on the trail when Arena was being formed. I remember getting calls and I didn't know, but it was basically taking like the best science out of the Broad and the Whitehead Institute and the Koch Institute, but privatizing that, turning it into an investment profitable model, which many of us felt that was a dubious goal because drug discovery is not easy to drive money. And if you're going to pay people top dollar to do bench work and lab research, you might come up with some potential investment ideas. But 50 million a year over 10 years was the idea to turn out all of these new biotechs. And many of us are like, wow, how are you going to really create value when you're basically just coming up with a new drug with maybe a novel target? And the other thing is, I think they're dealing with the headwinds of this year alone. When you look at seed and Series A investments, it's been essentially at a 10-year low. So most of the money has been going into de-risk, later stage clinical data driven biotech, Series Bs, Cs, and Ds. And I think they were probably feeling the effects of that. But it's already a hard model, even in a healthy market, unless everything's going IPO. So not too surprised, but I think the investors were probably saying, "How are we going to get our money back and make a return after 2 years and $100 million investment?" Maybe the writing was on the wall there.
What's the pulse from what you guys are all hearing from private companies? Have things maybe gotten a little bit better, or are they still really, really challenging?
I'll just jump in from the venture side. It's a trickle down. So venture is always a lagging indicator. So when the public markets downturn, we kind of like say, well, let's wait and see. Maybe it'll rebound. And when the markets start to turn up, it's also a wait and see. Like, is it real? Like, can we expect more IPOs? Are the valuations going to be, higher and sustained? And so I think right now is probably the most optimistic that venture has been, and we're starting to see more check writing, but I'd say we're not all in at this point. We're kind of waiting and seeing, but I think another quarter or two of some IPOs, valuations, keeping steady. Obviously, XBI over 100 and seeing some growth there. All of those signs are going to really, I think, bode well for venture private companies receiving money in 2026.
And my guess, Chris, is that it's, as you might have mentioned before, more of the de-risked later stage companies, maybe further in the clinic, maybe close to, phase 2, phase 3, versus some of the earlier stage stories, unless you're a unicorn of some sort. Is that fair as an assessment?
Well, yeah. I mean, if you look at the IPO queue, there's several flagship companies, and those were the bubble IPOs for a while there. So I think we're going to be watching that closely. I think if the IPO comes back to supporting an early stage program that maybe is de-risked with some in vivo PK that shows differentiation or something like that, then you could see more money flowing. I think you see a chasing and a following and crowding around certain targets. So best in class, I think, has a better chance of getting early money than a new, unvalidated novel target, that is in preclinical testing. I think that will take a while for the checks to really start flowing to those types of
Okay, great.
companies.
Let's switch to some of these more company-specific items. And Brian, you cover Soleno Therapeutics, which was a hot stock and certainly one that people were watching. And I guess they reported and comments on Soleno.
Yeah, so you could say I wasn't only blown up on regulatory stocks this week, also commercial. So Soleno announced their quarter, and yes, this is a drug that was approved back in March. Not controversial, but a debated approval decision. It was because they, originally did an RCT that failed, and they had a similar explanation like Sarepta that COVID had a role in that failure, but they didn't really file for approval based on the RCT. What they did is they did a randomized withdrawal study, and the randomized withdrawal study looked very positive. Now, there's obviously debates about how much confidence one can have in a randomized withdrawal study. There's more potential bias at play there than in a treatment initiation RCT. But the data looked really good. The FDA approved it. I don't think it was a really controversial decision. And it's on the market for Prader-Willi, which is really horrific disease. If anyone has familiarity with it, the patients are really need like 24/7 care for sort of this really compulsive desire to eat. And the drug treats this primary symptom, which is this compulsive desire called hyperphagia. This was the second quarter of sales, and it doubled the first quarter of sales. It beat consensus. We were street high at 58 million. They came in at 66 million. So I think if you looked back in March or April and thought they were going to do 66 million in the second quarter, you would think this is a home run of a stock. If you just kind of looked at the headline without knowing much about it and knowing sort of where consensus was versus where the sales came in, you'd think the stock would be up a substantial amount. And the stock is down more than 30% on the report. And there's a lot of reasons for this. So over the summer, the Scorpion Capital issued a short report on this company, basically claiming that you were seeing adverse events stack up, in particular hyperglycemia and peripheral edema and pulmonary edema, leading to hospitalizations. That the patients were not wanting to go on the drug, or they were stopped taking the drug. Physicians are being more and more hesitant to put patients on the drug, and this is really sort of clouded a lot of the Soleno story. And interestingly, like talking to investors, it doesn't seem to get a lot of traction that call is right, that patients are going to stop taking the drug, that physicians are not going to prescribe the drug. And a lot of the data, even in the quarter, kind of indicates that isn't the case. It did 397 new start forms, which is certainly down from like the initial bolus, but I still think weekly rate of about 30 is a decent number. The discontinuation rates look sort of what one would expect for a drug and disease of this profile. So it's not really showing that things are falling off of a cliff. But certainly people are now concerned that is this a drug that has a couple of good quarters and then kind of runs into a plateau? And when I tried to pitch it in the fall off in the stock price this week, a lot of people come back to me and they say, look at like a Skyclarys, or look at a Debut, which had 2-3 great quarters and then just kind of ran into a wall in like this, call it $80 to $100 million range, and those drugs have kind of just been clicking away, getting maybe a little patient growth, but nothing like what investors have been looking for. So that's sort of where the controversy on Soleno falls right now. Investors are a little worried that it's going to take time to really show that like the plateau isn't going to occur in another quarter or two. And I think with sort of the short report criticism, that's sort of hammered on the ability for people to kind of take more risk on the name. But Adam had a commentary on Twitter listening to the call, and part of the feedback is Soleno's sort of a management team that I would argue is very opposite in terms of like Sarepta, and I actually like their management style. They're very non-promotional. They kind of talk down their dialogue with FDA throughout the whole review process. They were never like, oh yeah, look, we are, we're personal friends with this reviewer, and the data is just so crystal clear, and there's no problem. They just kind of categorized it and said, here's the data, here are the issues with it, here are what we think, and to me, they've sort of been a great example of under-promising and over-delivering on things. The pushback now is kind of in this commercial launch cycle. Investors are kind of calling for more energy and more enthusiasm. And one of the things I think really turned people off is they sort of cited the short report in the call. And, I think a lot of us will say, Management 101 recommendation would be, do not publicly call out the shorts. You can criticize them. You could leave the sell side to kind of try to counter detail of it. But when you give them sort of the air, it takes on a whole connotation, and people worry, are you worried? And that's why you're doing
right.
it.
I think, I've had experience with Scorpion Capital in my own coverage universe, cover a company called Harmony Biosciences, which is in the narcolepsy space. We have had some narcolepsy marketplace updates, and Paul Centessa had some orexin data. You want to comment on that?
Yeah, very briefly. This orexin space has continued to be super hot and interesting. We think these could be a big class of drugs across an array of sleep disorders. We've seen data from Takeda in narcolepsy type 1, Alkermes from narcolepsy type 1. There's been some historical mixed data in narcolepsy type 2. So going into the Centessa readout, I think there were really like two questions. One is just, is their drug going to be differentiated? And two, are we going to see efficacy outside of narcolepsy type 1 because the biological rationale in type 1 is uniquely great, and in type 2 and other indications like idiopathic hypersomnia, it's less clear cut. The Centessa data are positive in that the drug clearly works. In narcolepsy type 1, there's a big effect size. There's an effect that's clearly clinically significant in narcolepsy type 2. Maybe the data didn't meet the bull case for Centessa because I think at face it looks more similar to some of the other products. And in the sleep disorder space, we've seen data sets that are in kind of these smaller phase 1 type studies regress a little bit to the mean in phase 2 and phase 3. And so, maybe the story there is not over as it relates to Centessa because they will be kind of tweaking their dosing and potentially going higher. But as I kind of think about it, this is sort of validating for the whole class in that you can have success in narcolepsy type 2 when you push the exposures higher than type 1 because it's a less sensitive population. And the next kind of data set here is we're going to get a bigger, longer phase 2 narcolepsy type 2 data set from Alkermes. And I think that's going to be a big catalyst for, I think, how investors even just kind of view this Centessa data, right? Because their type 2 data set was small and a shorter duration, and also the size of the class. Because if the Alkermes type 2 data is clear cut, you can start to dream the dream around other sleep disorders that are more heterogeneous. So continues to be an exciting space.
Yeah, Harmony does have also their own orexin. It's preclinical. They're going to put it into the clinic. But yes, this orexin space is really and fascinating, one that we'll be watching. Maybe the last thing that I'll wrap up with is I wanted to make a comment on Terns Pharmaceuticals, especially as we head into the ASH cancer meeting in December down in Orlando. Terns has an allosteric site acting tyrosine kinase inhibitor for CML. Lots of debates amongst investors with another company called Enliven Pharmaceuticals, or Therapeutics, that has a very intriguing compound that's a little further ahead than Terns. But Terns had some ASH abstract data where 6-month MMR data of 64% basically like blew the doors out when looking at benchmarks that are for the current other competitor allosteric drug, which had a 25% 6-month MMR. We had benchmarks of 32% for a 6-month MMR for the Enliven compound. And so for Terns to show 64% was really a home run. The stock has more than doubled since the beginning of the week. So with that said, it is a small data set. They're going to have an update in ASH. I'll be down there, down in Orlando later or in early December, but certainly a lot of fireworks happening in lots of therapeutic areas.